Taxes. The word alone can spark debate and confusion across the board. But have you ever stopped to consider who really bears the brunt of America's tax system? Stick around as we unravel the myths and realities of taxation in the US, promising insights that might just change the way you see your paycheck. Elevate your finances with WealthWise Insider, wisdom for wealth builders. Hi everyone, welcome to our exploration of America's tax system, a topic often clouded in complexity and controversy. Today we are diving into how the tax burden is distributed among Americans, from the financially challenged to the ultra-rich. Imagine a lineup of Americans arranged by income. On one end, we have individuals representing the poorest 10%, and on the other, the richest 10%. The question we're exploring is straightforward. What percentage of their income do these groups pay in taxes? The majority of Americans are subject to different income taxes imposed by federal, state, and local governments. However, a recent study conducted by two economists examined all income taxes and found that individuals with lower incomes contribute a smaller proportion of their earnings to the government, while wealthier individuals pay a larger share. This concept, known as progressive taxation, where lower income individuals are taxed at lower rates and higher income individuals are taxed more, is widespread in most countries. However, it also raises concerns among some critics who question whether certain individuals are avoiding their tax obligations. Why is it that 45% of the country's population isn't contributing proportionately to the collective? The middle class and the poor often pay significantly less. Let's consider another group within this demographic of 10, a representative of the 400 wealthiest Americans, billionaires. Unlike typical earners, billionaires often receive a significant portion of their income from sources other than traditional wages, resulting in their income being taxed at lower rates compared to those with less wealth. One might ask, do billionaires fulfill their tax obligations through other means? Indeed, they do. Income tax is just one aspect. There are various other types of taxes in the United States. The comprehensive analysis, which serves as the basis of this data, encompasses all such taxes. It suggests that when all taxes are taken into account, there may be individuals within this group who are not fulfilling their fair tax responsibilities. Let's revisit our initial chart featuring these 11 individuals, focusing solely on income tax. Now let's consider the impact when we incorporate all other types of taxes. One such tax category is corporate and property taxes, levied on possessions such as businesses, property, and associated earnings, areas where wealthy individuals typically have greater holdings. Consequently, these taxes disproportionately affect the affluent. Moreover, wealthy individuals often hail from prosperous families and may inherit substantial sums, subjecting them to estate taxes. When these taxes are amalgamated with others, it becomes evident that they impose a significantly heavier burden on the wealthy, including billionaires. When combined with income taxes, the overall tax load on the rich appears substantially greater compared to that on lower income individuals. Now let's delve into another tax that often goes unnoticed, the Medicare and Social Security tax, sometimes labeled as FICA on pay stubs. These payroll taxes, comprising contributions toward essential programs like healthcare and retirement benefits, are a vital part of our social safety net. However, they come at a cost. Consequently, payroll taxes are separate from income tax and are specifically designated to fund these programs. Examining your paycheck, you'll observe a 7.65% deduction for payroll taxes, with your employer expected to contribute an additional 7.65% on your behalf. However, economists have observed that in practice, companies often offset their proportion of the payroll tax by adjusting employee wages downward. Consequently, many workers effectively shoulder nearly the entire 15.3% burden of this tax, with all individuals subject to the same percentage contribution. However, there is a notable loophole for the wealthy. Once an individual earns beyond approximately $130,000 annually, any income surpassing this threshold is exempt from the Social Security tax. It's capped. Consequently, affluent individuals contribute only a minimal portion of their income toward payroll taxes, while those in the lower and middle classes bear a disproportionately heavier burden. When payroll taxes are factored into the chart, it appears more leveled out. Now let's shift our focus to another category of taxes: consumption taxes, which are incurred when purchasing goods. Consider the scenario of buying a t-shirt. Upon checkout, you'll encounter a sales tax, typically calculated as a percentage of the item's price. This type of tax extends to a wide array of purchases, ranging from furniture to household essentials like toilet paper and laundry detergent. Certain items, such as beer and gasoline, incorporate additional taxes into their prices, referred to as consumption taxes. Importantly, regardless of one's wealth, everyone pays the same rate on their purchases. You might assume that since wealthy individuals typically purchase more and pricier items, they would contribute a larger proportion of their income towards consumption taxes. However, when considering their overall wealth, expenditures, and associated taxes, these expenses represent a relatively small fraction of their income. Conversely, individuals across all income levels, even those with minimal financial resources, require basic necessities for survival. For the economically disadvantaged, these essential items and the accompanying taxes consume a significant portion of their earnings. Consequently, when comparing how much of their income each demographic segment allocates to consumption taxes, it becomes evident that lower-income individuals bear a much heavier burden. When we amalgamate these various taxes, a significant shift occurs. It becomes apparent that the U.S. tax system, when viewed holistically, lacks significant progressivity. Instead, it appears predominantly flat, with poor individuals paying a comparable share of their income in taxes as their wealthier counterparts. Surprisingly, even billionaires contribute a smaller portion of their income compared to other demographic groups, including the poorest. While focusing solely on specific tax types might lead to the assumption that the wealthy shoulder a greater tax burden in the United States, a comprehensive analysis challenges this notion. It suggests that if we are searching for a demographic segment that isn't meeting its fair tax obligations, our attention might need to be redirected. To sum up, a comprehensive examination of the U.S. tax system reveals a lack of significant progressivity, with lower-income individuals bearing a disproportionate burden, challenging conventional assumptions about tax fairness. Do you believe the U.S. tax system needs to be reevaluated to ensure fairness and equity for all citizens? Share your thoughts in the comments below. And don't forget to subscribe to WealthWise Insider for more insights on achieving financial prosperity. Until next time, remember, smart wealth, wise future.